going out and launching your own thing and like wondering where am I going to get my next payday from? At the same time, even though people are excited for me, I'm terrified. I'm absolutely terrified to be a fund manager and an owner operator of multifamily real estate, not leaning on somebody's track record, but creating my own track record. Scary as hell. So I was looking around at my circle of influence and understanding how much negativity I was bringing to myself, that I realized that I had to make some serious changes in my life. If I become like these people, it will not ever get me to the places that I want to go. I was introduced by Johnny Dessauer to this concept of large scale multifamily investing. Like I thought that I had arrived and that we were going to just blow up. Went down into Mexico just with like my tail between my legs. I wanted to figure out how to become a facilitator for putting sponsors and capital raisers together. And the overwhelming response from attorneys was, you have to start your own fund. I think there's something intrinsic in the person, inherent in the values and the personal things that they want to create, and they're wanting to self-actualize, that causes them to go down this road. I don't want anybody to tell me, hey, you need to help me and let me leverage you to grow my business. Anybody that says that to me is going to get the middle finger. It's like a mindset shift that has to take place to believe that you can even buy a $5 million property. The fast track that people have to go through is to surround themselves with people that are already doing it and realizing that these people are mere mortals. People don't realize that these buyers of apartment complexes are just dudes that you went to high school with. But the reason that people don't invest in private placements is because they know nothing about private placements. What is a private placement? I've never heard of that. What can you syndicate? You can syndicate hotels, baseball teams, casinos, movies, oil and gas. And what we syndicate primarily in my industry is multifamily. There's one dude that invests and buys property and he needs money. And there's other dudes that like have money, but don't want to deal with toilets, tenants, landlording, and putting in baseboards and all that stuff. They just want their check. You invest some of your hard-earned money, even if you're still in your W-2, with somebody that you know, like, and trust. But where do you find these guys that will... They're not these fund managers and syndicators. They're not hanging out on every street corner.
Edward Jones.
You don't have to be like this crazy millionaire to invest in a multifamily property. You can just basically team up with people and get access to these institutional grade investments. On average, from what I'm seeing from my friends in the business, they can double your money every 5 years. It's called the 2x equity multiple.
I think there would be a revolt if more people understood kind of the power of real estate. There's not the Edward Jones commercials for syndications or anything like that.
These deals are bought for long-term gains, for long-term generational wealth accumulation.
You can basically buy into a building, a property. You have the tenant paying your loan and cash flow. You get the money back after you've already had maybe 50 to 75% depreciation in that first year. So you collected your cash flow in year one. Then you got a negative K1 that shows that you lost money to the IRS. You got the tenant that's paying off your mortgage. You're collecting cash flow. And then you get all of that principal back in 5 years.
Within a recession-resistant asset class that is typically not available to the majority of the American public.
I just don't believe sometimes the game that we're in.
The whole idea is just to be of abundance mindset and share. Just get a little educated on something that is typically not available to learn about, especially not in college. Really what I love is these crazy guys, they buy a $50 million property, and then instead of cash flowing a bunch up front during the interest-only period, they'll like go into a 15-year loan and then barely make anything, if anything, up front for the first few years. And then like year 6, 7, 8 comes, the market is appreciated, the net operating income up on your apartment complex is increased, and now your property is worth twice as much as it was when you bought it. And you have all this ridiculous helicopter money in your equity of the property that you can then go deploy into another property, or just go and live on the Bahamas or wherever, you know, it is that attracts you. You can create a massive amount, particularly in today's economy, because the cap rates are being driven down and the prices of properties are being driven up so fast, particularly in markets like Phoenix and Dallas. It's just absurd how fast you could create. If your mission is not to make some quick bucks in year 3 or 5, but let's make a big chunk of money in year 10 or 15, You can go crazy in this business.
What's the future of private capital?
Private capital is already the main driving force of the United States economy because everything big is syndicated. Every major building downtown in your city was most likely syndicated. This particular asset class is recession resistant and very attractive for a number of reasons that I haven't even begun to talk about. You know what's really kind of taking off right now is funds and fund creation and the education behind what kind of structures are in place and whether or not a fund can invest as an LP into a deal or actually own the asset itself and how that looks. And like, do you want to do a blind pool fund? Do you want to do a deal by deal segregated fund? What are SPVs? What are series LLCs? You're telling me that I can do one company that has a bunch of funds underneath it and launch one every quarter or every year? Like all of this stuff, I invite them to get educated on this. And a great place to learn this is by listening to the show.
Maybe we've been making this so inaccessible, right? Why is it only the big guys get the good deals that they can kind of present to people?
Hey, so typically there's kind of a dilemma. If you're a capital raiser and you have a network of $500,000, if you've never done a syndication or maybe done a couple of very like limited co-GP type of structures and you want your GP card or your next level up, right? So what can you do? You can go and co-GP with somebody that requires you to negotiate an agreement, become an officer of their company potentially, and then have an ongoing duty in order to stay compliant with the SEC, in order to follow all the rules. You have to have this ongoing duty. The other option that you have is to start your own fund, which is going to cost you anywhere from $7,000 to $25,000, maybe even more $1,000. And that's also kind of a barrier of entry. So the nice thing about having a fund that's a limited partner in somebody else's syndication, assuming that you have that trustworthy relationship with somebody, you can become a capital raiser in somebody's fund legally, compliantly with the SEC, because as limited partner in somebody else's deal, you're not allowed to have an ongoing duty in that deal. The concept that I can work really hard for a few years and then go liberate myself is really appealing. But I'm also very well trained by some coaches that my mindset is incorrect when I have these associations in my mind that I do have to outwork people. Because in reality, I've seen it over and over where people can take month-long vacations like Annie Dickerson is doing right now. And in the middle of a capital raise, by the way, and bringing in more money than she ever could when she was working full time. This concept that I see over and over on my show where, you know, there's some people are just like, I'm going to out hustle. Like this is an opportunity for you to do that, but you don't have to. If you don't want to create success that way, you can do it on your own timeline. That's what I fear, is that I'll be delegated and relegated to that kind of mindset and way of creating wealth for myself when it's really not necessary. When I just align myself with the right people like Andy, we kind of brought it up, but there's all these different mechanisms and things that people don't contemplate when they're thinking about creating their own fund, and the mindset that you can create your own fund. Hunter Thompson, his very first capital raise was in a fund. And like, everybody's just like, oh, I have to do all these things before I could ever be a fund manager. I would recommend people educate themselves on funds as much as possible, particularly if they want to become capital allocators or are in a position like me where they would like to introduce their sponsor friends to their capital raiser buddies and get a piece of it. The way to do this, according to a lot of business fund architecture consultants, is to start your own fund.
Surround yourself, as Ruben's saying, with people that want you to succeed. They can figure out, I'm going to get a system for being consistent and in front of these investors and giving them value above and beyond. And the bar's not that high. Above and beyond what they're used to getting, I can elevate very quickly in this business. You are delusional.
Legacy Acquisitions